This is a sample of the creation of the operating activities section of the statement of cash flows. And let's remember, in the operating activities section of the statement of cash flows, we're taking a few things from the income statement and analyzing things on the balance sheet as well. So the things we're going to need to look for on the income statement are net income, any gains and losses, and depreciation. And then we're going to analyze all of the current assets and current liabilities from the balance sheet. And when I say analyze, we're going to take the changes in the current assets and the current liabilities. Also in this example, we're going to be using the indirect method of producing the operating activities section. This method is required by GAAP as opposed to the direct method. Anyone that uses the direct method, you still have to disclose the indirect method in the notes or at the bottom of the statement of cash flows. In this example, I'm not really given an income statement or a balance sheet. I'm just given sample data that we're going to use in creating our statement of cash flows operating activities section. So under the indirect method of producing the operating activities section of the statement of cash flows, we're going to begin with our net income. And again, that would be found on the income statement. So our income is $500,000. Now from this amount, we're going to be making adjustments. So I like to stay on the income statement until I get all those items done, and then I'll transfer to the balance sheet. So I'm going to look for any depreciation and gains and losses. So let's look for gains and losses in our data here. There are no gains and losses, so therefore I'll go to depreciation. We do have depreciation. So let's think about depreciation. Depreciation is a non-cash expense. No cash was dispensed when we expensed depreciation. However, depreciation did reduce net income. So, since we're interested only in cash on the statement of cash flows, we need to add back the depreciation. So I'm simply going to add back depreciation of $47,000. Now I have completed my use of the income statement and can move on to the balance sheet. So we'll start by analyzing the current assets or the changes in the current assets on the balance sheet. Keep in mind we do not analyze cash in the operating activities section, even though it is a current asset. Keep in mind this is the statement of cash flows, and we're actually trying to find out where the changes in that cash account came from. So we're not including it in the three sections or in any of the three sections of the statement of cash flows. It will actually appear at the very bottom of our statement of cash flows. So the first current asset in our list there is a decrease in accounts receivable of $200,000. So let's think about what that means. So if accounts receivable decreased, and accounts receivable is when someone owes us money, if that goes down, that means we received cash. Someone paid on account. So therefore, our cash increases by the amount that accounts receivable has decreased. The next current asset on our list is prepaid insurance. And the description says that prepaid insurance increased by $10,000. So when a current asset increases, that means we dispensed more money for that asset to increase. So we've prepaid our insurance in advance or paid our insurance in advance. Therefore, our cash went down $10,000. That was all of our current assets. Now I will move to our current liabilities and start analyzing those. Here we only have one current liability. It's accounts payable. And the description is that accounts payable decreased by $75,000. So accounts payable are monies that we owe for the purchase of inventory or a bill received. And when they decrease, that means we paid money toward that debt. So that means cash will decrease on the statement of cash flows. Now we can add our total adjustments to net income, and they were $162,000. So our cash provided by operating activities in this case is $662,000. So remember, if this happened to be negative, we wouldn't say that this is cash provided by. It would be cash used by operating activities. And that follows through with the other sections of the statement of cash flows as well. So keep in mind that the operating activities section of the statement of cash flows is a representation of the day-to-day operations of the business. So we want this number to be positive, and we want it to be pretty high. If our day-to-day operations is not bringing in a positive cash flow, then investors will look at that as probably you are not a going concern. So also there's two more sections to the statement of cash flows. There's the investing activities section and the financing activities section. And we'll look at a problem, a statement of cash flow in more detail in another video.